Hello guys, welcome back to my YouTube channel. Today I'm talking about combined single limits insurance, its definition, example, benefits versus split insurance. What are combined single limits? Combined single limits refer to a provision of an insurance policy that limits the coverage for all components of a claim: bodily injury per person, bodily injury per accident, and property damage to a single dollar amount. That is, a combined single limit liability policy has a maximum dollar amount that covers any combination of injuries or property damage in an accident. A combined single limit can also be used to cover bodily injury claims for more than one person in an incident. For example, the policy might state the insurer will pay up to X dollars for a single claim. This applies whether the claim relates one person's injuries, whether there are three injured parties, or whether there is property damage in addition to body injury. The combined single limit maxes out the stated dollar amount no matter the claim categories. Combined single limit policies are helpful because they allow insurance companies to apply the maximum amount of coverage where it is needed. Key takeaways: combined single limits are the provision of insurance policy that limits the coverage of all components of a claim to a single dollar amount. The combined single limit policy has a maximum dollar amount that covers any combination of injuries or property damage in an accident. Combined single limit policies tend to have higher premiums than split limit policies because they offer broader coverage. How combined single limits work? Combined single limit liability policies, also called single limit policies, are frequently used in automobile insurance. The combined single limits refer to a maximum amount of money that's paid out of claims that involve all aspects of bodily injury and property damage. The limit would cover all people involved in the accident or the claim other than the insured. The maximum amount of coverage would be split between those injured. Combined single limit versus split limit. The opposite of a combined single limit is a split limit, which states different maximum dollar amounts that the insurer will pay for different components of claim. A split limit policy coverage breaks up the payout into three areas of coverage: bodily injury per person, bodily injury per accident, property damage. For example, a policy with a combined single limit might pay a maximum of $300 per incident. On the other hand, a policy with split limit might pay $100,000 per person in, per incident of our body injury with a maximum payout of three $300,000 per incident. If one person seeks $250,000 in damage of for their injury, the combined single limit policy will cover the entire amount of $250,000. However, the maximum payout under the split limit policy would be $1,000. The only way $100,000. The only way split limit policy would pay $300,000 is it if three different people each had $100,000 in claim. Since they offer broader financial coverage, combined single limit policies tend to have higher premiums. Another way to obtain broader coverage than a split limit policy offers is to purchase a personal liability umbrella policy. This type of policy picks up where your automobile or and homeowner insurance leaves off, regards of which type of your limit insurance policy uses. An umbrella policy can ensure that you are fully covered if you are liable for a very expensive accident. For example, if you have a combined single limit policy for a split limit policy that maxes out $300,000 but you are being sued for $1 million, your umbrella policy could provide the additional financial protection you needed. Important. Combined single limit policies can be benefit those with a lot of asset to protect. However, for those with few assets, such policy might not be worth the cost. That that's it for today, guys. In next video, we will talk about disadvantages and disadvantages of combined single limits. Thanks for watching.